All right, my friends. First video of January 2024 and the first video of 2024 and many more to come. What better way to start out than with our Golden Gate Strat, which we've talked about at length over the last 6 months, and finally able to get this video together for you. I'm really excited to go through it, and I think it'll be helpful for many people who are enjoying ATR levels and the pivot ribbon. And I look forward to hearing your feedback and the results that you have while you're trading it. That being said, this presentation is not financial advice, and I'm not a financial advisor. So anything that you learn from this video that you start implementing on your own is those trades are your trades and your trades only. So make sure you backtest everything and fully understand what you're getting into, manage your risk, and do all the wonderful things to make sure that you don't put yourself in a difficult situation. All right. With that being said, let's get into this video and talk about the Golden Gate. So this is what we're going to talk about as far as the Golden Gate Strat. We'll talk about ATR level probabilities and the Golden Gate, and I want to give a shout out to my good friend Robert Tezak, who's Tezak on X and YouTube, and of course in our Discord. He has done a whole bunch of work on ATR levels probabilities, and things like the Golden Gate Strat cannot exist without Robert. He is instrumental in providing us tons of actionable data that we've been able to use over the last 6 months and longer. And he continues to find new insights and data analysis of ATR levels and pivot ribbon, which has given us even more confidence in trading the system and finding new ways to utilize it to our benefit. So huge shout out to him. You should definitely check him out. Worth a follow on X. He brings up great statistics all the time on X. And he's got a YouTube channel which has the one of the original videos that he talks about probabilities. And of course, some of the work is not public that he's discussed in the R&D channel for Discord, which has led to some of the things that we've been able to utilize in the last few months. So super cool dude. Definitely check him out. And I'm sure you'll see me interacting with him a bunch on X, as I have been for the last few years. And he is actually one of the first users of ATR levels, I think way back in February 2022. So he's been in it for a long time and is spending a lot of time trying to figure out how to optimize utility of the levels. So we'll talk about day trading the Golden Gate setup, bullish and bearish. We'll talk about swing trading the Golden Gate setup, the Qs. I had a beautiful setup last year that I posted on X for everybody, and it basically hit perfectly. So that's a great example. I want to show you that one. And then I also want to show you the fractal nature of the Golden Gate. This is a new addition. I actually redid the video because of this. I want to show you that it actually works on multiple different modes. And this is something actually Robert already had assessed and given the probabilities for, and it worked. Still, the standard probabilities for a Golden Gate, whether you're on the day mode, multi-day, swing, position, or long-term. So I'm going to show you 4 modes where Tesla just worked out with position mode happening just this last week. All right. So what are the ATR level probabilities? So there's a lot more to go into, and I think we're just going to talk about 2 pieces of it for now. And I'll have a more detailed discussion around this, and I'd love to get actually Robert involved in that. So we'll have some videos between me and Robert, or Tezak, whichever you prefer to call him, in the next coming months, and I think we can get really into the details around a lot of this data. And provide you guys some interesting actionable insights on it. But for now, the two most important pieces that we're going to use are that there is a 60% chance if price reaches the 38.2 level, and that's the ATR level, that it reaches the 61.8 ATR level. And if you're unfamiliar, or you're kind of scratching your head, well, what the heck is the 38.2 level? That's the level just above the call trigger or just below the put trigger. So the same thing is with the minus 38.2 and the minus 61.8. And why do we call it the Golden Gate? Why do we call it the Golden Fib? Well, 61.8 is the Golden Fib. That's a standard sort of nomenclature for that level, whether you're using Fibonacci levels. And I've just kept that same lingo for ATR levels since they are based off Fibonacci crossed with ATR. And so the idea here was to come up with a name that connected breaking through that level to get to the golden fib. And so Golden Gate is what came out of that. And I think it sticks, seems pretty catchy, pretty straightforward, and that's just sort of stuck. Everybody likes it, so that's what we're using. So the plus minus 38.2 level is what we call the Golden Gate, and that leads us to the golden fib, which is the 61.8 level. Now, this, just knowing this alone, 60% chance that you're going to hit it, is in itself a strategy that you could just trade exclusively if you wanted to, right? It is a strategy that you can trade. When you have a higher chance that something's going to work out than it's not going to work out, that's an edge. You have an edge on the market at that point. So you can leverage that edge to stay in the trade and potentially reach your target. We do that a lot. That is a very common play that we day trade regularly in the group. So, and I talk about it a lot on Twitter as well, or X. And so it's something that we use regularly, and it's an awesome way to stay in trades and to look for short-term targets, particularly if you're doing short-term trades on, let's say, SPY or Qs, SPX, IWM, those, any of the indices, or, Megatech works on that as well. It works on almost everything, but definitely higher volume names. You generally have the best results, and that's mostly what I trade anyways, is the indices and Megatech, basically. Mag 7 plus. Additionally, the most interesting stat, which I use a lot to keep me in trades, and again, this is another stat that came from Robert's data, is there is over 70% chance when an ATR levels hit that you're going to get to the next level. So if you're in an uptrend, that would be the next level above, and if you're in a downtrend, that would be the next level below. So I use that also to stay in trades, right? And that helps us a ton. With sort of being confident in a trend move. Okay, so those are the ATR levels probabilities. Let's dive into an example to sort of solidify that 38.2 to 61.8, or that minus 38.2 to 61.8, minus 61.8. Okay, so here's the strat page, which you guys are all familiar with. This is the one that I posted on Twitter many moons ago, and probably you guys have it saved somewhere. But this is the call trigger. This next level up is the Golden Gate, and this slightly lighter level above is the golden fib, the 61.8, right? So you can see here on this Q's example, had some sort of a trend line breakout at the beginning of the day, hit the call trigger, pulled back to the ribbon, hit the Golden Gate, got rejected at the 50% level, pulled back and held the 48. So we didn't get a VOMI, right? VOMI's breakdown of the 48, held the 48, consolidated, and then it broke out. And what you got was a bull flag into the Golden Gate. The Golden Fib, right? So the Golden Gate hit early in the morning, and then you hit the Golden Fib roughly late morning, right? So pullbacks to a trending ribbon, when you've got this nice, beautiful stacked trending ribbon, you get a pullback and it holds, let's say, the 48, the 34, the 21, any of those, or even a pullback to the 13, those are buyable dips. Those are buyable dips that you can take with confidence that it's likely, or you could have even recovery of the call trigger would have been fine. You could have done the bull flag, however you want to do it, but that should give you some confidence that it's likely that we're going to hit that level unless this starts to break down, right? Then it could be part of the 40% or 35% case where it doesn't work out, and that happens. That does happen. So you have to be okay with the fact that sometimes it's just not going to work out in your favor. But in this case, it did, and this is a great example of it working out in your favor on the upside. So, again, the bullish case is it hits the 38.2 level. Ideally, you've got clear trend. Now, this is something that's not part of the statistics, but this is just something that I've added that I'm looking for. Generally, I want to see clear trend because it provides better entries, right? We're looking for pullback entries. So looking for an entry at the ribbon if possible, but you can, of course, use, break of this support turns, this was resistance. The call trigger was resistance, turned back into resistance, turned back into support, and that's pretty confidence inspiring. So I would have taken that if you didn't want to take the bounce off the 48. But generally looking at an entry at the ribbon, and then you have a take profit level. Of course, you can take profit at the 50, you can take profit at the 61.8, and then you can leave runners if you want. You can do it however you want, but just that alone can be a pretty decent trade on indexes, anywhere from, let's say, 0 to 7 DTE, you can get a pretty decent move on that, just that Golden Gate play alone. Okay, same thing on the bearish side. This is an IWM example. So again, it's the opposite. It hits the minus 38.2, goes to this minus 61.8. And again, this is the put trigger, and this is the, or short trigger if you prefer to use that label. The next level down is the Golden Gate, the minus 38.2. Taps the minus 38.2 and didn't quite get a pullback here. So, you know, you got one after it hit, sort of tapped it. You got a little bit of a pullback to the ribbon. So this is a 3-minute chart. Of course, you can go down to 1 minute. I don't think in general that's probably a good idea for this sort of play, but you were in a squeeze. So any sort of meaningful pullback into this, candle here would have been fine for an entry, momentum entry. If you did look at your 1 minute, it would have probably looked like a pullback to the 1 minute ribbon. And then in momentum, and of course, when you have a momentum, if you have momentum, let's say on a 3 minute, going down to a 1 minute can make sense. If you have momentum on a 10 minute, going down to 3 minute, momentum on an hourly, going down to 10 minutes, et cetera, right? So once you have momentum on a chart, zooming in a little bit to be able to get better entries can often be helpful. But in this case, crosses the 38.2, does a pullback, create a little bit of a gap here, fair value gap, and then you were able to ride that straight down to the 61.8. This is a harder trade to get into, but you know there's a second chance here too if you wanted to do it, right? Rejection of the 48, you could have gotten in again. But this is showing the example of it actually performing the Golden Gate Strat, right? Hits the minus 38.2, goes to 61.8. So let's say you were swinging it, right, overnight. If you were already in IWM swings and you saw this start to break down, you probably have some pretty good confidence it can get to this mid-range. Sometimes it goes over. Of course, this is not perfect. ATR levels are never perfect. Pretty good, though. Pretty well respected by the market. And, yeah, good trade. So that's the day trade example. Now let's talk about a swing example. So this is the chart that I posted back in November, right, of 2023. And this is a beautiful trade that I posted. I posted this publicly for everybody. I wanted to show it as a swing example. Super solid setup. So there's a couple things we got going for us. You know, we got nice trend. You got an inverse VOMI, right? Ribbons flipping. You've got conviction arrow, which is the 1348 crossover. Shifting to the upside. You've got nice strength in the trend. And we tapped the position Golden Gate. So now we're a little bit far from the ribbon. We got this conviction arrow. So ideally, we're getting a pullback. Now, when we actually happened, we didn't get much of a pullback. We actually got a pullback, I think, roughly to 375, and then a rip. So it didn't go quite as far as I was hoping. I was hoping for it to retest this resistance, turned into support. It didn't quite go there, but it hit the mid-range. And so I posted this one on X, posted this one, of course, in the Discord as well. And it worked out beautifully, and we had a beautiful trend line break as well. So a lot of things going for this. So even if, let's say, you had a trend line break and you're looking for, targets, you could say that this swing high could have been a target, 380. There's another swing high above. You could have said that that's a target, or supply zone above that could have been a target. But this is beautiful because you can say, hey, I've got this, I've got this breakout, trend line breakout. I've got an inverse VOMI. So that's two things. I've got a conviction arrow with a pullback in trend, and I've got the position Golden Gate and mid-range. That's a pretty sweet swing. Like, I'm going to take that swing. That's going to happen, right? That's a high confidence swing for me because it's like 5 setups in one, right? All going together. And I've got targets that I can target. And here's what happened. Boom. Got a pullback to 375, and it gapped up the next day. Face ripped and basically tapped the Golden Gate. It actually it went higher, went up to 390, and of course touched the you could have gone for the measured move of this trend line break, which would have worked perfectly fine too. But this is nice because you're putting a whole bunch of pieces together to sort of give you this upside play, which is wonderful. It just gives you more confidence in taking the trade, and I think it's super, super beneficial. At least it is for me. So that's the Q's example for a swing. You already have some setups already in place. Now it can give you additional confidence for potential targets to scale out positions, right? You know, instead of scaling out here, right? Maybe you got here, you saw resistance the next day. Okay, I'm just going to take off my position. Well, then you would have missed out on this massive move, which, you know, was huge. Let's say you took 380 calls, or 385 calls, or whatever you took, right? 375 calls, in the money calls, and those would have absolutely mooned on that. So pretty cool example there. And then let's look at the fractal nature of Golden Gate. So here is a day mode example. You know, it hits support at the Golden Gate below the put trigger, and then it goes to the golden fib, right? That's a day mode example on Tesla. Actually, there was a bunch of these. You can see another one. It's the golden fib here, goes to the mid range, right? So this happens basically all the time, and it's definitely worthwhile looking at for opportunistically for potential trades. You know, this is break above resistance. You know, this pullback to the ribbon was a nice entry, and, you know, nice scale out for a scalp. Like, that's a 10-minute scalp right there, right? So it happens all the time, definitely worth watching. That's 2 day mode examples. Here's a multi-day example. So again, just to refresh everybody's memory, day mode is daily candles, ATR, a daily ATR, multi-day is weekly ATR. So here's an example, you know, downtrend on the hourly, breaks down this multi-day put trigger. You can see there's a trend line break as well if you wanted to draw the trend line break. Resistance at the previous close, not good, right? That's not good. That much resistance at the previous close is not a good thing. This is the previous weekly close. And it breaks down the put trigger, retest, and hits the golden gate, gets the golden fib, right? Straight off the bat. Didn't even need to do anything. Just straight off breakdown, right? Pull back, breakdown. There's another opportunity to get into it, and you could have ridden this essentially all the way down without any issue. Okay, so that's the multi-day. This happened within the week. Now here's the swing mode. So see that we're using 4-hour candles now with the swing mode here. Swing mode is monthly ATR, right? So, you know, never really recovered the previous close of the month. So the prior month, which was December, broke down. Beautiful 4-hour trend. This is gorgeous shortable 4-hour trend. I mean, every pop to the 4-hour 1321 zone shortable. And so you could have just taken it as a ribbon play, but let's say you got in, right? It broke down here, resistance at the ribbon, support, and sort of a descending triangle breakdown, right? So you enter, let's say at the put trigger, or, you know, pull back to the put trigger 13 zone, let's say here for good risk, you know, take out 240 as your risk maybe for that swing. Beautiful move down, hits the golden gate and hits the golden fib, right? There's a little consolidation, so that may have scared you out of the position. But if you're exiting along the way down, no big deal. You're scaling out position along the way down, and then maybe your runners hit, or you know, you've got the third position here hits, and then you leave runners for additional move. And again, scaling out, because it's fractal, can help a ton. So let's, my bad. Scaling out is super good. So, you know, Tesla position mode, this is a quarterly ATR levels, right? Again, they're different levels, but, you know, all of them work in a fractal way. Broke down the put trigger. This is nasty, right? This is just a vommy, straight up vommy. Conviction arrow, didn't get much of a pullback, really. Kind of a pullback here, and then it just dumped after earnings. But hit the golden gate. Broke below the fib. I mean, it technically counts if it gaps below the fib, it still counts because it hit that price essentially, or it went below the price. So it paid. Let's call it that way. So hit the golden fib and then broke below. This is what I was waiting for. This is why I didn't publish the video earlier. I wanted to redo it with this as part of it because I think it's important for you guys to see the fractal nature of it. A couple more examples on position mode here. Hit the golden gate. Hit the golden fib. Hit the golden gate. Hit the golden fib. Failure. Hit the golden gate. Did not hit the golden fib, right? So there's a failure example right there. Here's an example. Gapped up above the golden gate and then hit the golden fib, right? So, you know, again, this is just another piece of the puzzle. It's a very useful strat. I mostly use it for day trading, but I have been starting to use it a lot more for staying in swings. I don't use it particularly as a straight up swing setup. I use it in conjunction, like I showed you with the Qs, as a, you know, way to sort of build a bunch of confidence in a particular trade. And that's it. That's the Golden Gate Strat. I hope you guys enjoy it. Again, take a look at Robert's page. And if you guys have any questions, feel free to drop them. If you like this video, then drop a like. And if you love this video, I'd love to have you as a subscriber. Tons of more content that I have planned for this year and beyond. And I look forward to sharing that with you. You guys all have a wonderful day, and I'll see you in the next video.